Hey folks, hope you all are doing well. I'm Karan Bandal from Econosite, your weekly economic wrap from India and around the world. So let's get started with the top two economies. When will China overtake the United States in terms of GDP? What we have here are the forecasts made at different points in time by different entities telling us when might China's GDP surpass that of the United States. Let's call that moment a parity date, that is, the date when China's GDP becomes equal to that of the United States. The trend observed in these forecasts is interesting. Let's take a look. You can see entities like Goldman Sachs, OECD, The Economist, and EIU kept on predicting different parity dates as time moved from 2003 to 2023. The combined wisdom of those forecasts is the trend line that you see. Looking at this trend line, from 2003 to around 2012, China's prospects were getting better. Parity date of 2041 as initially predicted kept on moving closer. Somewhere around 2010, the trend line was expecting that China will achieve parity with the United States in 2024. That's next year. It made sense at the time because in 2003, China's GDP was only 14% as big as America's, but it was growing rapidly. Between 2007 and 2009, United States wobbled as it reeled under the global financial crisis. China kept on growing. China's yuan appreciated, and by 2010, China's GDP was 40% the size of America's. But things changed a few years after that. China clumsily devalued the yuan in 2015, which spooked investors. China's growth remained strong, but the exchange rate adjusted for inflation stopped strengthening abruptly. You can see the trend line changed direction in 2012. Every successive year since 2012, the expected parity date kept on moving out in the future, now sitting at 2040 again. The present situation is that China's productivity growth has slowed and its demographics have turned. China's workforce is already shrinking, a decline that will probably accelerate in the coming decades. The UN projects that China's population aged 15 to 64 will decline by more than 100 million in the 2030s. According to Capital Economics, a research firm, if China's GDP does not overtake America's by the middle of that decade, it may never do so. Now on to climate change. How to generate a $100 billion climate fund. Unusually strong and frequent instances of forest fires, heat waves, storms, floods, droughts, and so on. We all have seen at least a few of such extreme weather events in the recent past around us. All this stemming from climate change. This is an issue we all need to address with urgency. To that end, many parts of the world are engaged in reducing their carbon footprints by transforming power, automobile, and transport sector, just to name a few. How about the global shipping sector? The shipping industry emits 2.9% of the world's greenhouse gases. It has also largely escaped taxation because what happens on the high seas is not in the jurisdiction of any single government. Taxing this sector's emissions to accelerate the move towards a greener world will be one of the ideas that will be presented at French President Emmanuel Macron's summit on a new global financial pact in Paris later this month. Here is how the proposal is taking shape. The shipping industry uses fossil fuels to power its boats. International shipping emits about 740 million tons of greenhouse gases each year. The United Nations body that regulates shipping is called the International Maritime Organization, or IMO. If the IMO starts levying an emissions tax of $100 a ton, it will bring in $74 billion in a year. Such a tax, if increased in a phased manner, could raise as much as $100 billion a year in the medium term. This pot of money can then be channeled to poorer and emerging countries to help them cope with climate change. These at-risk countries can use this climate fund to roll out green energy, build flood defenses, and invest in innovations such as clean fuel ships. Beyond raising resources to deal with climate change, what this tax may also do is that it will make alternative fuels, mostly based on green hydrogen, more financially attractive, helping shipping industry move towards clean energy sources. Granted, this tax would push up the cost of traded goods around the world, but Maersk, a container giant, estimates it would only add a few cents to the price of a pair of sneakers. So all in all, this would be a win for the industry, a win for the planet, and a win for the consumer. Let's end on the most populous country. India manages to achieve a relatively high GDP growth with a relatively low inflation. India beat expectations and grew at 7.2% in the financial year ending on March 2023 to become a $3.75 trillion economy, a significant achievement for the current administration in power. In 2014, when the ruling party won elections, India was a $2 trillion economy. In 2024, that is next year, India is expected to cross a $4 trillion mark, doubling its GDP in 10 years. India has already crossed the UK to become the 5th largest economy and is en route to become the 3rd largest in about 3 years. On this growth path, India has been able to manage its inflation in a sound manner also. During the last financial year, India's retail inflation or consumer price index, that is CPI, averaged at 6.7%, when inflation in the United States and the EU ran close to 10%. CPI trend this fiscal year is even better. April and May 2023 CPI came in below 5% and well below the Reserve Bank of India's upper limit of 6%. These low CPI readings are helped by strong base effect, of course, a fall in global oil and commodity prices, easing supply chain pressures and easier food inflation as the Rabi crop enters the market. However, uncertainties on the weather front and volatile crude oil prices pose risks to the inflation trend. In summary, in the last 20 years, China has had ups and downs in its growth story. China overtaking the United States was once considered inevitable, which now seems a lot less likely. There is a lesson in that for India. Things look rosy now, but err on economic policy and you risk suffering the same fate. Although India's demographics are much more forgiving than that of China. Finally, climate change is here, it needs to be dealt with, and for that, we need more innovative ideas like the emissions tax on the shipping industry. I hope you found this week's wrap interesting. I'll speak with you again next week. Until then, take care.